Okay, next section, real estate taxes. First two formulas, we have to figure out what the assessed market value is. So we're taking the market value, which is usually stated, multiplying it by the rate of assessment. That gives us our assessed value. We need the assessed value to multiply it by the tax rate to figure out what the sales tax is, or sales tax, real estate tax is. So in the first example, we have the market value of $340,000 with assessment value of 40. So that means they're only charging tax on 40% of what they're claiming the value is, or what the market value is. Then the tax rate is 50.71 mils. I'll explain that one in a second. So step one, we take the market value, multiply it by 46, or excuse me, by 40%. It's 136,000. And then the next thing is we need to convert the mills rate to a decimal. So we take the 50.73 divided by 1,000. We get 0.05073. That's what the tax rate is going to be. So we take the 136,000, we multiply it by this amount. So on this property, the real estate taxes are $6,899.28. So really, this is the only thing that's new.
Why does this lesson remind me of 10.1? When you were doing 10.1, you were adding,
no, this is
multiplying the by 1,000.
No, that one was totally different. It was because of, no, that one was finance amount, how much the mortgage was. So, I guess it's a little bit similar. Example number 2 is the most important one because it's giving you the tax amount, so you have to do it backwards. So you see how we divided this to get the tax rate and then we multiplied? Mm-hmm. So if we have 46 mils, it's got to go over 1,000 times, we don't know the market value, times it's telling us 45%. So what we need to do, first thing is we need to combine like terms. Okay, so we divide this, 46 divided by 1,000, 0.046, and then we multiply it by 0.45. So we're combining these two, which is 0.0207, and then the market value. If we knew what the market value was, we could figure it out. So then we end up dividing it. This amount goes in the calculator first, and then this tells us the market value. Okay? So set up your formula like this, and then solve. You're going to take whatever, maybe it's missing the assess rate, maybe it's missing the mills rate. Something will be missing here, and all the steps are the same. You're just combining like terms and dividing it out to solve for what the answer is. How do you know these questions? It's going to tell you the tax amount. These ones are going to be figuring out the tax amount. Okay?
Sounds easy.
Okay. Real estate taxes. When you own a property, there's tax on it. They usually set it annual, but it's in 2 installments. Assessed value means what they say the property is worth that they're charging tax on. Market value and assessed value are 2 totally different things. Market value is basically what they could sell it for if they decided to sell it right now. Rate of assessment, that's this right here. It's whatever the tax amount that's being charged on the assessed value. Okay, that's it. Good talk. All right, Jason, get it done.